The economy of Australia is a highly developed mixed economy. As of 2020, Australia was the 13th largest national economy by nominal GDP, 18th largest by PPP adjusted GDP, and was the 25th largest goods exporter and 20th largest goods importer. Australia took the record for the longest run of uninterrupted GDP growth in the developed world. With the March 2017 financial quarter, the 103rd quarter, and marked 26 years since the country had a technical recession. Its GDP was estimated at 1.3 trillion Australian dollars as of 2020. The Australian economy is dominated by its service sector, comprising 62.7% of the GDP and employing 78.8% of the labour force in 2017. Australia has the 10th highest total estimated value of natural resources, valued at 19.9 trillion United States dollars in 2019. At the height of the mining boom in 2009-10, the total value added of the mining industry was 8.4% of GDP. Despite the recent decline in the mining sector, the Australian economy had remained resilient and stable and had not experienced a recession from 1991 until it eventually did in 2020. The Australian Securities Exchange in Sydney is the 16th largest stock exchange in the world in terms of domestic market capitalisation and has one of the largest interest rate derivatives markets in Asia. Some of Australia's large companies include Wesfarmers, Woolworths, Rio Tinto Group, BHP, Commonwealth Bank, National Australia Bank, Westpac, ANZ, Macquarie Group, Telstra and Caltex Australia. The currency of Australia and its territories is the Australian dollar, which it shares with several Pacific nation states. Australia's economy is strongly intertwined with the countries of East and Southeast Asia, also known as ASEAN Plus 3, accounting for about 64% of exports in 2016. China in particular is Australia's main export and import partner by a wide margin. Australia is a member of the APEC, G20, OECD and WTO. The country has also entered into free trade agreements with ASEAN, Canada, Chile, China, South Korea, Malaysia, New Zealand, Peru, Japan, Singapore, Thailand and the United States. The ANZCERTA agreement with New Zealand has greatly increased integration with the economy of New Zealand, and in 2011 there was a plan to form an Australasian single economic market by 2015. Australia's average GDP growth rate for the period 1901 to 2000 was 3.4% annually. As opposed to many neighbouring Southeast Asian countries, the process towards independence was relatively peaceful and thus did not have significant negative impact on the economy and standard of living. Growth peaked during the 1920s, followed by the 1950s and the 1980s. By contrast, the late 1910s, early 1920s, the 1930s, the 1970s and early 1990s were marked by financial crises. From the early 1980s onwards, the Australian economy has undergone intermittent economic liberalisation. In 1983, under Prime Minister Bob Hawke, but mainly driven by Treasurer Paul Keating, the Australian dollar was floated and financial deregulation was undertaken. The early 1990s recession came swiftly after the Black Monday of October 1987. As a result of a stock collapse of unprecedented size which caused the Dow Jones Industrial Average to fall by 22.6%. This collapse, larger than the stock market crash of 1929, was handled effectively by the global economy and the stock market began to quickly recover. But in North America, the lumbering savings and loans industry was facing decline, which eventually led to a savings and loan crisis which compromised the well-being of millions of US people. The following recession thus impacted the many countries closely linked to the US, including Australia. Paul Keating, who was treasurer at the time, famously referred to it as the recession that Australia had to have. During the recession, GDP fell by 1.7%, employment by 3.4% and the unemployment rate rose to 10.8%. However, the recession did assist in reducing long-term inflation rate expectations and Australia has maintained a low inflation environment since the 1990s to the present day. Mining has contributed to Australia's high level of economic growth, from the gold rush in the 1840s to the present day. The opportunities for large profits in pastoralism and mining attracted considerable amounts of British capital, while expansion was supported by enormous government outlays for transport, communication, and urban infrastructures, which also depended heavily on British finance. As the economy expanded, large-scale immigration satisfied the growing demand for workers, especially after the end of convoy transportation to the eastern mainland in 1840. Australia's mining operations secured continued economic growth, and Western Australia itself benefited strongly from mining iron ore and gold from the 1960s and 1970s, which fueled the rise of suburbanisation and consumerism in Perth, the capital and most populous city of Western Australia, as well as other regional centres. The Australian government stimulus package helped to prevent a